Welcome back to Bloomberg Television, live from New York. You are in the loop, and I'm Betty Liu. Here's a look at the top stories in our Bloomberg Equity Report. SpaceX chief Elon Musk calls it a battle of David versus Goliath. He's in Washington lobbying for fair competition for space launches. The Air Force is proposing to award 40 launches to Boeing and Lockheed Martin, a contract worth $10 billion for the year. Boeing is down 7%, and Lockheed Martin is down 3.5%. Oracle agreed to pay about $200 million to settle allegations it overbilled the government. The company sold over $1 billion in software to the General Services Administration from 1998 through 2006, but promised the same discounts it offers its commercial clients. Oracle is down 4% for the year. And Walmart calling for help. The world's largest retailer having trouble keeping its shelves stocked. Cuts in staffing leave it unable to keep up. It's hiring outside firms to track its inventory. Walmart has posted declining same-store sales in 9 straight quarters for the year. Its stock is down about 2%. And the monthly jobs report is just moments away. Economics editor Mike McKee and Wells Fargo chief economist of Bloomberg Best, John Sylvia, are ready to walk us through the bottom line. Lizzie O'Leary standing by at the Labor Department. Dominic Chu here with the market reaction. Let me get straight to Lizzie with those numbers. Lizzie?
103 jobs, Betty. 103,000 jobs created in the month of September. 103,000 jobs beating expectations. The unemployment rate staying constant at 9.1%. And we have revisions as well. When you add in August and July, that's a net up of 99,000 jobs. Now, remember, there were Verizon workers on strike. They came back. That's about 45,000 of them. When you break out the private and government payrolls here, we saw an overall private sector gain of 137,000 jobs, a loss in government of 34,000 jobs. Some 5,000 of those were from the Postal Service. We have also seen the work week and average hourly earnings tick up just a little bit. Average hourly earnings moving up 4 cents. That's 0.2%. Year over year, 1.9%. The work week went up to 34.3 hours. We look through the numbers, and this does seem to be a story of people coming back into the labor force and finding jobs. Often in a situation like this, you see the rate go up because people have come back into the labor force, increasing the labor pool. Now, there are some caveats here. The long-term unemployed, that's that number Ben Bernanke referred to as sort of a national crisis. That moved up. 44.6% of those unemployed have been out of work for 6 months or more, moved up about 200,000. And the U6, that number that pros look at, people who are marginally attached to the labor force or working part-time because that's all they can find, that moved up to 16.5%. When you break out the sectors, the ones doing well, professional and business services, 48,000 jobs. Education and health, 45,000 jobs. Construction, 26,000 jobs gained, and that was mostly in non-residential construction. Manufacturing moved down by 13,000. Temporary workers went up 19,000. So by and large, there are some positives in here when you take out some of those sort of internal fluctuations and the weird things. It actually does come in a bit beyond the forecast, Betty. The headline numbers, 103,000 jobs created in September. The unemployment rate holding steady at 9.1%, Betty.
Lizzie, thank you so much. And on that better than expected jobs data, Dominic Chu, we are seeing a pop in the markets right now, Dom.
That's right, 103,000. It's a nice big up number, much more than expected, almost twice as much as expected. So you can see the reaction right now in equity futures. Those S&P futures were up about 2 or 3 points heading into the number. You can see they're up 11, 12 points now. Dow Jones futures up almost 100, almost a full percent. NASDAQ futures also up 2/3%. If you look into where the real spike came in, you can kind of see here, right? As you look across here, the real spike up right when that number came out, a nice move about 8 or 9 points in the S&P futures. Looking at what's happening with treasuries right now, same kind of move here. 10-year treasury yields are heading higher. They were already heading higher going into the numbers. You can see there a huge spike up as well towards the end of the chart. So we're seeing that reaction in treasuries. And let's follow it up with commodities because, yes, these commodities will show you sometimes that overall economic view. Crude oil up about over 1% right now, up to $83.51 for New York crude. Gold futures holding steady. You'd expect that with better than expected news. Copper futures up almost 2%, Betty. So, yes, this is kind of a nice move across the board for all of those risky type assets. We'll see if that holds heading into the opening bell, Betty.
Okay, Don, thank you. Mike, we did indeed get the verdict we wanted here in the jobs data here, right? I mean, we are not in a double dip.
We are not in a double dip. We're not in a new recession. Doesn't mean we can't go into one, but it does suggest that companies are not as cautious as perhaps we thought they were. Let me start by looking at the overall headline number and pointing out not this month, which was good news, but the two prior months, particularly August. In August, we had a zero print the first time, and that included the striking Verizon workers. Now you get, even with those striking workers, 57,000 jobs created, so that's not bad. If you added them back in, you'd be over 100,000 for the month of August as well. Second, let's take a look at hours worked. Gain in hours worked is worth about 200,000 jobs, they say, roughly equivalent in terms of the amount of spending power it creates, a tenth, and we tick up by a tenth, so that is good news as well. Service industry hiring strong, and in that we see business services, temporary workers tick up another 10,000 over the prior month. Suggests that companies, they're not ready to commit yet, but they are bringing in workers to handle the extra load. We talked earlier about how sales at retailers and auto dealers and others were up in the month of September. And finally, we'll talk about local government. All of this took place even though local government employment fell during the month. A lot of teachers laid off, 24,000 laid off. So this comes on top of that. All in all, good news. Not great, but it does show, Betty, as you say, we're not in recession.
Right. And Mike, just stay with me for a moment because I want to bring in our Bloomberg Best and Wells Fargo chief economist, John Sylvia. And John, you know, Mike makes a good point. If you took out what is going on in the government, I mean, we would be a lot higher here in jobs, would we not?
Oh, yeah, I think the private sector is moving along, perhaps at a disappointing pace relative to historical expansions, but it still is economic growth. And I think the bottom line is what you're doing is you're taking out the double dippers kind of distribution end of this story, and the market's improving because now the probability of those recessions is really diminished, and we have economic growth. It's modest, it's good, just not the kind of growth we're used to in the past, but hey, we'll take it as it is today.
Right, we will take it as it is. Looks like the markets are taking it as it is right now. Okay, John, just hang out with me. Also, Mike as well. We'll be back with both of them in just a few minutes. Also, coming up at the top of the next hour, we're going to be talking with Tony James, the president of Blackstone Group, the world's biggest private equity firm by assets. The topic, private equity's role in creating jobs. And we'll get more reaction to those job numbers. Joining us will be the CEO of the world's largest bond fund manager, PIMCO's Mohamed El-Erian. And then next hour, stay with us, a better than expected jobs report.